Top of the morning, everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for October 11th, 2017. Well, hey, it's a real cool day here in Nebraska. We actually had a frost last night. So fall is here. And that is a reminder that we also have our new round of earnings that's just about ready to kick off here. So we'll talk about that just a little bit this morning. First off, let's take a look here at the overall market. The Diamonds was able to manage a new record high close. It's just like every day we get a new record high close, it seems like anymore. And was able to manage that before the end of the day. But that's the only index that was able to do it. If we take a look at the SPY actually rallied back toward the end of the day, but as you can see, just left us a very tiny price action doji here. We did break out at one point in the morning, but we tended to just chop the rest of the day. Very quiet price action. And if you remember, that's kind of what I've been calling for all along this week, is just choppy price action ahead of the FOMC minutes and also ahead of earnings season kickoff. So this morning we're looking at just a little bit of a slightly bearish open. Nothing major. You can see the SPY looking to open just down here in this chop range. And honestly, I think what we've got going on here is nothing more than a little bit of a consolidation, a little bit of rest, which is actually a healthy thing for the market after such a strong run up. The diamonds themselves are looking for just a little tiny pullback. I mean, almost non-existent there, at least at the moment. They have been using the diamonds as their method to continue to draw more people into this market. They pump and pump and push and pump on just the very few stocks. Only about half of the stocks in the Dow average were up yesterday, and they were just using those to kind of keep the market, and have been, to keep the market thinking that, hey, we can just continue to buy. Well, if you look at that SPY, you can see we've just got a little bit of rest going on, and that even carries forward. If we take a look at IWM has been in a very tight consolidation here for the last week. And honestly, this is a very healthy looking consolidation. So this morning it looks like we could dip down toward the bottom of that. We want to stay, somewhat in this price range. We don't want this to really fall out too much. But as long as we hold this upper trend, I think we're in a real good place here on IWM, and it could set up for more upside. So let's kind of keep an eye on that. Let's take a real quick look at the Qs. Now the NASDAQ has been holding up pretty well, and you can see it pulled back sharply yesterday, but wasn't able to hold on to that pullback. The bulls stepped in and pushed it back up. But there is a concern here. If we take a look at Apple, Apple is the biggest influence on the Dow index, or excuse me, the Qs, the NASDAQ. And you can see we've created a pattern here that it's very disturbing, okay? First, the sell-off fell below the 50-day moving average, rallying back to the 50. Yesterday, it rallied up there strongly, kissed that 50 moving average, and then pulled away from it like it was kryptonite. And that's a typical pattern that we like to trade. It's called a blue ice failure. Rallying back to test that 50-day moving average. Now, this is going to require follow-through. One candle does not make a trend, so we need to see some follow-through to the downside. But this could signal that Apple could see some more lows to come here in the near future. So watch that closely. Apple could be a big influence on the Qs today if it starts to tumble lower. So keep an eye on that. Let's take a look at the VIX. The VIX itself hanging in here very well. We're in this range. I call this the danger zone in here. This is where we see complacency. Okay, and that complacency is, really hit historic lows here last week, and we've been slowly just climbing back up here into that zone that shows us that little bit of danger of just the market being a little bit over complacent. Now, that doesn't mean that we're going to fall off a cliff, but it is something to pay attention to and be watchful of. And what I mean by that is, make sure you have a trading plan. Make sure you have a plan for each and every trade you make, just in case. You don't want to be making an emotional decision if the market does suddenly react negatively. We want to have a plan to protect ourselves and our capital if that were to occur. And you can see how quickly those can occur when we're in this area. We just get these really fast spikes. So you want to watch that closely and just make sure that you're not overly long the market or over trading this market, particularly as we head into earnings. There could be a lot of back and forth going on as we head into earnings. One last thing I want to take a look at. It's called T2122. And T2122 is just really nothing more than the 4-week new high and new low ratio. And you can see we've been up here in this area where we normally find reversals. But notice we can stay up here for a while. We can bounce around up here for a while. And we're not at extreme levels up here. But we're certainly not down here at this bullish reversal zone either. And you can see how consistent this is. I mean, this works very, very well to show you, those danger points or the places where we could see a pullback. Now, it doesn't have to be a major pullback. It can actually be just a nice little pullback or consolidating pullback that moves us back down. So watch that. Watch this area. It might be really interesting to see if we're going to pull back down here toward that middle zone. You can see down in here we can get those reversals back up as well. So let's keep an eye on that. Just go in with a little caution. Have your eyes wide open that some profit taking, some selling could occur. Okay, now we have the FOMC announcement today, and I'm going to go back here. The FOMC, not the announcement, I'm sorry, the FOMC minutes. We on the economic calendar, we've got a Fed report here, our speaker this morning, and then we have the jobs opening report. They're expecting that to stay very strong, and it's unlikely this will move the market much. But then this is the news of the day, and that'll be the FOMC minutes that comes out. A lot of the chop that we've seen the last couple of days is a result of the market just kind of waiting for that news. And everyone's kind of hoping it will give more clarity as to future rate increases, some of the details of how the Fed plans to unwind their balance sheet. We will see. I kind of doubt in this world of so much Fed openness that we're going to learn much more. But that's how the market responds, and so it's kind of waiting. The other thing it's probably waiting for is the earnings reports. Now, tomorrow, we have a few earnings today, but tomorrow we kick off with two of the big banks. And that's really kind of the kickoff to our new earnings season. So tomorrow we have Citibank and JP Morgan to pay attention to. Plus there are several others, but those two will report prior to the market open, okay? And so the market will react to that. We won't have the ability as a retail trader to really do anything about it. If they report great, we could see the market really gap up. If they happen to report poorly or unable to support current price levels, then we could have a problem. with those, and the market could see gap down open. So make sure you're planning accordingly. Make sure you're not overly long the market. You're in a comfortable position. You've taken some profits, and you're in a good place to head into that kind of a news event, because it can be pretty darn crazy when those begin to start. Now, also, we have on Friday, we have a couple more. We have Bank of America. We also have Wells Fargo reporting. And there's a few others in there as well, but those are the big ones that will be reporting. And so we're going to have to kind of start keeping an eye on this stuff. Now, the reason I bring that up is I want to make sure and mention that everyone needs to be checking earnings reports prior to. You don't want to be caught by surprise or caught flat-footed on an earnings report. Make sure that you're checking those earnings reports for everything that you own and for those that you are planning to trade, just to make sure that you have an adequate plan to protect yourself and your capital. Okay. So think about that as we move forward. It's going to get real crazy here over the next couple of weeks. We're going to really ramp up those earnings reports, and the market will really start doing a lot of reacting to those news events. Okay. Hey, I want to wish everyone an awesome day, great profits. And folks, if this is the first time you've seen this information, I put this out every day. Now, I believe in preparation, not luck. And so I put this out every day. This is part of my market preparation, but I just happen to share it. And if you find this useful, please do me a favor and click on that subscribe button and the follow me button on Facebook. And please feel free. I mean, those thumbs ups really help. It helps show this video. The algorithms will show it to more people. The more thumbs up we get on these videos. And also, feel free to drop a comment. If you feel it's worthy, please feel welcome to share this with any of your friends or trading friends around there. Because if it finds someone that can get some use out of this, you've done them a favor as well. So thank you, everyone. Take care. Have a great day, and I will talk to you all soon.